Nashville price cuts are exploding. Now, this isn't just about cutting the price, but we're reaching a threshold in which this may materially change the pricing direction for the rest of the year. But what's even crazier is the amount of relistings that are masking price cuts in addition to what we're seeing. So in this video, we're going to look at price cuts, inventory, contrast that with what's going on with demand, and then I'm going to peel back the layer of what's going on with relistings, how they're masking the number of price cuts we actually have, and what this means for you as a buyer or a seller. If we look at active listings, we can see active listings are up 10% year over year. Now, this is important because this is the time where active listings ramp. In the spring, they ramp. And so the fact that they're 10% up year over year means that they're ramping just as fast as they did last year at a higher amount than we had last year. So in other words, last year at this time, we were at 7,600. We have 800 more active listings, 8,400, but we've had 800 more active listings for several weeks, and it's still building. Nashville price cuts as a percentage of active listings, 32.5%. Okay, 32.5%. That means that if you have 8,400 active listings, we have 2,735 price cuts right now. They look at the original list price, they look at list price, and they say, okay, 2,700 have dropped. Now let's look at Davidson County. Davidson County inventory is flat, less than 1% growth. Williamson County inventory is up 9%. But look at Wilson and Sumner. Wilson up over 200 active listings from the previous year. Sumner up 200 active listings. Almost half of that active listing growth is showing up in Wilson and Sumner. Just in case you don't know where that is on the map, let's just pull up a map here. Here's Sumner County. It's just north of Nashville. Here's Wilson County. It's just east of Nashville. These two counties, which make up maybe 25% of transactions, are taking up half of the active listing growth. That's kind of important because if some of these other counties start picking up, like Davidson, which is the largest county, and it's not growing at all, what would happen then? Let's look at contract volume. Okay, when we look at contract volume, it's flat. Demand is flat year over year, and it's flat basically right now. It's the same as it's been for the past 26, 25, 24, and 23. So the past 4 years, we've had the same number of buyers. Median price is still around $500,000. Keep in mind, median sales price is what buyers are paying in this market. And the truth is that we have a influx of buyers coming in every year. It's been the same, 23, 24, 25. We've had very similar domestic migration numbers. Realtor.com analyzed IRS data and showed that in 2023, there were $3 billion in migration adjusted gross income coming into the state of Tennessee, $3 billion. And if we look at the census data, we could reasonably say that there's $3 billion a year coming in to the state. This is a tailwind against all these headwinds. I'm not saying prices can't go down. I'm just letting you know we got about 20 to 30,000 people coming in every single year. They're bringing $3 billion of income with them. On one hand, demand, the same number of buyers spending about the same amount of money. On the supply side, we've got more supply right now. We've got a lot of sellers that want to sell and then buy again, and they're fine with the price because they're just trading one house for another. If it drops in one and it drops in the other, they honestly don't care that much. And so we've got all these dynamics playing out. So what's happening with price cuts, and what can it tell us about what is about to happen? Price cuts as a percentage of active listings are at 32.5%. Now, it's really important that you realize this is higher than the past 3 years. It's higher than the past 3 years, and it's ramping up faster than it did last April, 32.5%. Now, why is that so important? Well, if 32.5% of active listings have cut their price and active listings are ramping faster, you've got a whole lot more active listings. And at the same time, we have relistings These are people that couldn't sell last year that have decided to relist. And a lot of them, 60% of them, are listing at a lower price. Let's take a look at the relistings. What can we see? We've got a whole new report called the Relisting Report. What we can see, there's 1,500 active listings identified in the past 7 days that are new. And so of those, we've matched back 663 to previous matches. Majority of these are the ones that are still active and coming soon. There's 445 of them active and coming soon, and they are relisted. Almost 59%, 261 are relisted at a lower price. Okay, you add that 261 back into the active listings we see here, the 2735 active listings that have already cut their price. We add that 259 back in, 35.5% of active listings have cut their price. Anytime you get over 35%, over a third, it means the market is starting to shift down. We could be seeing a market that is shifting down. Now, let me show you what it looks like in a neighborhood, and then we're going to come back and look at individual listings that have cut their price because I think they're kind of fun to look at, to be honest with you. I've been looking at some. We're going to look at these in just a second, but let me show you what it looks like in a neighborhood. If we go to a neighborhood and you're like, what does it look like if prices are starting to shift down? Here's what you'll see though. In general, what you'll see is the higher active listings are lower than the highs, and the lower active listings are lower than the lows. We kind of see that here. You see that? This is an area that could be dropping in price. Let's go to Green Hills area. Let's take off the off market so we can just look at it. Here, you don't see it as much. It really doesn't look like prices are dropping. It looks like they're basically flat. If you decide you want to look at maybe just attached, what you'll probably see is that it's dropping, and you can see it here. The attached is definitely lower. And if you want to do detached, maybe on the larger side, a lot of times what you see is that it's actually going up. Let's just see. I don't know. Yeah, see, it's kind of going up. Different prices, different property types in the same area will still get you a different result. Let's take a look at some of the price drops. I think this is fun to do. Look at this. Franklin, it's 1.7 million. Garden Ridge Drive, okay, 1675. You can see it was listed at 2.1 million in 2024, and now 1675. This listing has dropped almost $500,000. $500,000. It's well over 20%. It's dropped, and yet it would not show up as a price cut because it's a new listing. Let's take a look at another one. Here we go. This is in Hermitage. This is a $599 house. So let's just take a look at it. It's a new build. You can't even see it in the history here. $599 and $210 a foot. But if we look at the previous MLS, you can see it goes back to $700,000. The same listing was at $700,000. They are dropping the price big time on this. You would never know if you're looking at the active listing. You would never know that they have dropped their price over $100,000. It's the exact same listing. Let's look at this 1.4 here on Murray Lane. Beautiful house, 1.4 million. It's on Murray Lane, which is kind of a busy area. Days on market too. This would not show up as a price cut. Acre and a half would not show up as a price cut. Let's take a look at what's really been happening with this house. They were at 1.7 in June of last year. They were listed at 1.7. They're now at 1.4. This is a 15% price cut on this house. You don't see that at all. 261 price drops that are not showing as price cuts. It's huge on top of a massive growth in inventory coming over the next 4 weeks. We're going to see inventory growth, the most growth we'll see all year over the next 4 to 6 weeks. We've got price cuts that are accelerating higher along with active listings coming on and relistings at lower price. Y'all, this is a soft market. It's a great market to be aggressive in. I don't care what the property is. If it doesn't have an offer, you should be asking. I'm asking in some properties over 10% off. And these are buyers that I'm telling, like, look, we'll get this at market value or maybe the lower side of fair, but we're still asking very aggressive. And I'm having a lot of success with sellers that know that they don't have anybody else to talk to. If they don't have anybody else to talk to, they're going to talk to you if they want to sell their property. And if they don't, I think there's going to be another 1,000 options that come on over the next 4 weeks in addition to what we have now. So think about that. Stuff's going to go under contract, stuff's going to close, and you're still going to accumulate an additional 1,000 options on top of where we're at now. So if you are a buyer, this is your time to be patient if you can. It's your time, if you like a property, to be aggressive on your offers. And just remember, the backside of the summer, if it continues like this, it's going to be very, very soft, very interesting to watch. And with that, I hope you all have a great rest of the day. I look forward to seeing you next Saturday. Thanks for watching.